Hi, and welcome to Mondays with Marlo. Well, we have the Queen today. She's our only four-timer. You are the Queen, you know, Susie. We love you.
Oh, I like that.
And our community loves you. And this is a perfect time to have you on because we've spent too much money through the holidays on gifts and foods and dinner parties and all that. And tax time is coming. So we really need you right now, more than ever.
You know why else this is a perfect time, seriously, to have me on? Because all of us, all of you, have experienced how little the people in charge of this country really know.
That's right.
How they make moves to whether keep themselves in office, but are they really making moves that's good for you people? So since chances are maybe they're not, now's the time for you to make moves right here that really will help you.
See, this is why you're on all the time.
But it's true. Think about it. I mean,
yeah,
that's why we got to do this more often.
We're ready.
Okay, let's
You're
go.
a regular as far as I'm concerned. Anyway, so there's a million questions and we have to get right to it. So this is from Brianna. I have about $10,000 sitting in a savings account and I feel like I should be doing something with it. What would you recommend that's not too risky? I don't want to lose it.
Girlfriend, listen to me. When you say you don't want to lose it, you better pay attention to what you're saying to yourself, because anything you do with that money other than leaving it in a savings account, a money market account, you have a chance of losing it. Now, you didn't say, but do you have at least an 8-month emergency fund, meaning 8 months of money that could pay your bills if something happened to you? You better. Do you have credit card debt? If you have credit card debt, pay off the debt. Do you have student loan debt? Put it towards there if you need. But if you don't want to lose it, let it sit. Otherwise, you will be sorry.
So let it sit just in a savings account?
Listen, she says right here, something, I don't want to lose it.
Right.
Anything other than letting something sit in a savings account, a CD, something like that, you have the risk of losing some of it.
But is a savings account just too little?
Well, it's too little, but I rather have little and know I haven't lost my money.
I see.
Than invest $10,000, lose 10%, and now I'm down $1,000. I would have rather have it sit
Well,
there.
are bonds better than a savings account?
Bonds are better than a savings account, but to get a good interest rate on a bond, you're going to have to lock it up for a good 10, 15, 20
Oh,
years.
I see.
So she doesn't want to do that either.
Okay. All right, Brianna, that's your
Sorry,
answer.
babe.
This is from Louise. I've heard you get taxed very heavily if you cash out your 401k early. Is that true, or is it roughly the same amount of tax that comes out of my salary?
Louise, this is not a question that you should be asking, believe it or not. This is a question that you should know without a shadow of a doubt. First of all, in my opinion, her employer should be educating her on this. Yes, you will be taxed on it, the exact same amount as you would be taxed as a paycheck, ordinary income. But here's what else. You will pay a 10% federal tax penalty on any amount of money that you withdraw. You withdraw $10,000, $1,000 will go as a tax penalty to the feds and could be 2.5% or more for a state tax penalty as well. Here's the thing. Why in the world would you want to take money out of a 401k early? That is absolutely ridiculous. Money in a 401k, Marlo, do you know it's protected against bankruptcy?
Oh, I know that.
And so you're going to need money to compound and grow for you, so leave it right there. Do you hear me?
When you say compound, how much do you get on your 401k?
Depends on where she has it invested. So most 401k plans, you can buy the company stock, or you can buy different mutual funds, growth mutual funds, index funds, bond funds, value funds. So you do that, and your money eventually will grow at whatever rate you're getting on it. There is a new law that I think we should tell people about.
Oh, tell us.
Everybody listen to me. For the first time ever this year, if you have money at a 401k where you are working, and your 401k has a Roth 401k, right? 401ks, you put money pre-tax. Roth 401ks, you fund with money you've already paid taxes on.
So when you sell it, you wouldn't get tax.
That's right. When you withdraw it, there's no tax
Right.
at retirement. You now can convert, while you're still working, money in your 401k into a Roth 401k, as long as you have money to pay the taxes on it. But you can do it little by little over time. So if your company has a Roth 401k and you're young, you have 20, 30, 40 years, you should definitely think about doing that and contributing to your Roth 401k versus your regular 401k.
So when you say it's just this year, you mean it's this year from now on?
That's right, but it's
Yeah.
a brand new law
Right,
that
right.
just happened.
Oh, that's great. That's great. This is from Gretchen. What are the 3 most common mistakes people make when it comes to personal finance?
They think nothing's ever going to happen to them. They think, I'm never going to get sick. I'm never going to die. I'm never going to lose my job. I'm never going to not have money to pay my bills. But really, the 3 big mistakes are this. They don't have a will, living revocable trust. They don't have the paperwork in place today to protect their tomorrows. Do all of you have out there a will, a living revocable trust, an advance directive, and durable power of attorney for health care? If not, you need it. And maybe if you stay tuned to the end of this broadcast here, webinar, what do we call this? Webcast. Maybe we'll give you a passcode that allows you to go and download some state-of-the-art documents for free, $2,500 worth. But you also don't have the right type of life insurance or enough life insurance. The only type you should have is term, and you should have enough to make sure that your beneficiaries are really taken care of for the rest of their lives. And the beneficiaries of those life insurance policies are usually your children.
Right.
Here's the problem. Children, minors can't inherit money. So you have the wrong beneficiaries, you don't have the right amount of life insurance, and you don't have the documents in place today to protect your tomorrows. You're not funding your 401k plans. You're not getting out of debt, and I can go on. But that's some of the biggest mistakes.
Those are it.
None of you are making those mistakes, are you? No, I didn't think so.
This is from Kara. I want to save up for something big this year. What are the best ways to do that? I already do things like pack my own lunch, avoid Starbucks.
So here's what you would do, Carl. Every single time you go to spend money, you are to ask yourself this question. Is it a want or is it a need? If it's a need, you need to do it. If it's a want, don't do it. But take the money you were about to spend on this want and put it in a savings account to save up for this other big thing that you want. You should really ask yourself, really? Do you want that or do you need that? But that's how you do it.
This just goes on and on.
Just cut back on all wants.
Right.
And the other thing you can do, and this really works really well, when you pay in cash, you give somebody, you buy something for 50 cents. You give somebody $1 and they give you 50 cents back. Save your change. If you just pay in paper bills from now on, not your credit cards or anything, but bills, you'll save $30 to $60 extra per month in the change that will end up in a jar for you.
Just spending cash really impresses you.
Yeah.
You know, I know when I go to the airport, I take the taxi, and then I buy the magazine and the paper and the little coffee thing. I think, I can't believe I just spent $50.
And I want you to all hear what Marlo Thomas just said. When she goes to the airport, she takes a taxi. She did not say when she goes to the airport, she takes a limousine, a car. Now, I can tell you, I am sure this woman is quite fine, financially speaking. But she's fine because she watches every penny that she has. So it doesn't matter how rich you get, people, you have to watch your money.
But it's amazing when you're spending cash.
Do you know why you like that? Because you and I both have learned to get more pleasure out of saving than spending.
Yes, it's been a long time coming.
Yeah, well, if you can just learn from us, you'd have a lot more money when you get older.
It takes a long time to get there. This is from Bridget. Tax season is coming. Are there any new laws I should be aware of? Well, you told us one.
Yeah, I told you one. And the main thing that you should really understand when it comes to taxes is that taxes are going up, obviously, for those who make a lot of money. But because there's a lot of misinformation on this, please just know, if you make under $200,000 as a single, $250,000 as a couple, finally jointly, your capital gains tax and the dividend tax will stay at 15%. A lot of people are saying, oh, you're going to be at 20. You will not. You are still at 15%, and that is forever. Between 200 and 250 as a single and couple, between that and 400,000, you're going to pay that extra 3.8% for Obamacare. So then you'll be at 18.8%, and from 400 to 450, you're going to be at 20% capital gains and dividend tax plus the 3.8. So just know those, because that will have an effect on what you should do with money.
That's right. This is from Celia. Hi, Susie and Marlo. Tax season is coming up, and I'm not sure if I should do the taxes myself or go to an accountant. I've used TurboTax in the past, but I'm not sure if I'm doing everything the right way.
I have to tell you, I would continue to use TurboTax or any of those programs. I think that a lot of the accountants and places that you go, I think they use the exact same
You really?
programs. I do. So save the money and do
Well,
what
how
you're
does she
doing.
know she's doing it the right way?
Because you don't know, but here's the question. How do you know when you go to see somebody that they're doing it the right way? And I would bet more money that a company such as a TurboTax that has all these people doing it, if they weren't doing something the right way,
Right.
yeah,
we'd hear about
we'd
it.
hear about it. So these programs now are so advanced that they kind of catch you if you're not doing something. But here's what you can do. Do TurboTax. Now go to see somebody as well. And compare the two.
Oh, that's good.
Wouldn't that be funny
Yeah,
to
and then
find
you'll
out?
know.
Maybe you know more than you think, but then you'll know for sure.
Then you'll know for sure. That's good. That's very good
I like
advice.
that one.
And then you'll know for next year that you got the right deal going on.
Yeah.
This is from Joanne. Hi, Susie. I'm a single woman who desperately wants to make a budget for myself, but I don't know where to start. Do you have any suggestions for tools or resources I can use?
Yes, I do. But the first resource I want you to use is yourself. You want to go on a budget. Budgets are like diets.
Right.
Okay. You lose 20 pounds on a diet, then you
Right.
get frustrated and you gain 30. You cut back and you cut back on money and then all of a sudden, before you know it, you're in a store and you walk out with 7 pairs of Jimmy Choo shoes.
Right.
Like that, you can't even afford half of a pair to begin with.
Right.
So you don't want to go on a budget. You want to start to be in control of your money. So let's just start doing simple things such as, without cutting back everything, let's just say you have Starbucks every single day. Have Starbucks every other day to start. Let's say you go to the movie once a week. Go to a movie once every 2 weeks. Let's say you get your hair cut every 6 weeks. Get your hair cut every 8 weeks. So just start little by little and taking note of how little changes really cause big things to happen when it comes to money. Then what you can do is change. But first you have to know everything that you are spending. So here's what I tell you to do. I would go to SuzeOrman.com. And right on the front page there, you'll see Susie Tools. And I have for free an expense estimator. You go on, it asks you all the questions. It will tell you if you're overspending in an area, underspending in some
great.
areas, and you'll see what does it take you to live every single month on average, and you'll start to know where to cut back.
Exactly. That's great. This is from Nancy. Hi, Susie. I love your show. My daughter's 22 years old and has just started saving money in an IRA. How much should she be contributing to the IRA on a monthly basis? She has an entry-level position, so she doesn't make much.
So first, it should not be, since she's not making a lot of money, she shouldn't be in a traditional IRA.
Oh.
She should be in a Roth IRA. Remember, a Roth IRA is an account that you fund with money you've already paid taxes on.
Right.
So since she's hardly making any money, she's
Right.
not in a really high tax
Right,
bracket.
exactly.
So why would you want to take a tax write-off today
Right.
to later on in life in a traditional IRA withdraw money at a time when possibly you could
So
be in the
she's in the perfect place.
That's right. So a Roth
Yeah.
IRA is number one where she should go. Now there is a law, and the law is very simple. You can only fund, the maximum you can put in a Roth IRA or traditional this year, if you're under 50, is $5,500. 50 or above, it's $6,500. So divide that by 12, and just whatever she can put in, she should do on a monthly basis. However, it's $5,500 as long as you're making at least $5,500. If her daughter is only making $2,000 a year, then the maximum she could put in to her Roth IRA is $2,000. So whatever she can put in there, she should put in there, assuming we know that she's making at least $5,500.
Great. Wow. Is
You know
there
why
any-
else she should do a Roth IRA?
What?
And people don't really know this. Any money that you put into a Roth IRA, you can take out at any time without taxes or penalties,
Oh, wow.
regardless of your age.
Because it's your money done. You know, it's completely clean.
The growth on that money has to stay in there until you're 59 and a half or 5 years
Right.
before paying taxes and penalties.
Right.
But your money that you put in, you can take out any time you want.
That's great.
So don't be afraid to put money in a Roth IRA, people. In case of an emergency, you can take out your original contributions, no taxes, no penalties, regardless of your age.
Oh, that's great.
Really?
Is that a new law too?
No, but nobody knows that.
Nobody knows anything that you know.
I know. Why is that?
You're smarter than the rest of us. This is from Jennifer. My daughter is graduated from college.
Wait, I am not smarter than the rest of you.
Well, you've studied it.
No, I am no different than all of you. It's just that I love knowing about money because money is what's going to carry us through. Why can't you just love knowing about your money? Why do you have to hate your money and not whatever?
And be afraid
of it. Listen, if I can do this, you can do this. Got it? All right.
Well, but you've studied. You've really studied it.
But still.
How do we get as smart? Well, how do we study it?
You study it by seriously watching the Suze Orman show, and if you don't have money, you shouldn't be paying for cable, people. Watch it for free on iTunes. Or download like that.
Right.
So just watch and listen the same way that I did. You know, and want to learn about it. And I have to tell you, obviously I grew up, I was dyslexic. My mama was a secretary. You know my story. I was a waitress till I was 30, having been a waitress for 7 years. So when somebody says to me, oh, Susie, my parents didn't teach me about money. My parents didn't educate me. I'm not good at math. Oh, please give me a break. Doesn't fly here, people.
Well, she certainly called me on that one, didn't she? This is from Jennifer. My daughter's graduating from college in May, and I'm considering opening a retirement account as an investment for her future as my graduation gift. What do you think, Susie? And if this is a good idea, what kind of account should I open? If not, what other suggestions do you have? I'd like to gift her $2,000.
So, Jennifer, your daughter has to be working for her to fund a Roth IRA or an IRA or what retirement account, all right? So if you give her $2,000 and she's not working, for whatever reason, she can't put that into a retirement account. Does your daughter have student loan debt? Does your daughter have enough money to do what? A first and a last deposit so she can rent her own place. Sit down and talk with her and say, I want to give you $2,000. How could you best use that money right now? Down payment for a car? Does she have credit card debt? Sit and talk with her. Because if you just give her money and yet she's suffering, it's not going to help her. So have a conversation and then you'll know what to do.
Absolutely. Brilliant idea. That's all good for that. Colleen, what do you think?
Oh, wait. Do you see what she says?
I missed something.
She says, by the way, this is for this last email, right? I wasn't able to help her with college due to some personal and financial issues myself over the past 5 years.
So that means she does have debt.
So here's the question. I know you want to help your daughter, but are you sure you can afford to? Since you've had issues over the past 5 years, do you really have enough in your retirement, in your savings, in your paying down your mortgage, in you doing what you need to do? The best gift you could give your daughter is to make it so she doesn't have to be financially responsible for you when you're older and you don't have enough money. Just think about that.
Yeah.
Do you know what the number one questions now we're being asked on the Suze Orman show is, I'm really worried about my parents, Susie. They haven't been responsible with money.
Wow.
They're 60, 62, and I'm going, great, I'm 62 essentially, and it's like you're telling me that your mother's irresponsible at my age. She doesn't work, she lives with me. And that's the number one question right now.
Wow.
So parents, take care of yourself if you really want to help your kids.
That's right. In fact, a friend of mine just told me that because she's so worried about her children not ever having to take care of her, she took out long-term home insurance policy.
Yes, long-term care insurance is fabulous. But it's only fabulous, by the way, if you can afford it the year you get it, as well as all the way until you're 84 years of age. Because average entry into a nursing home is age 84. Average stay in a nursing home is 2.5 years. And so many people take out long-term care insurance, and then when they no longer are working, they can't afford it and they drop it. And that's what the insurance company is hoping. So do not, if you can afford it now, all the way until you're 84, perfect age to buy long-term care insurance is in your early 50s. But if you can't afford it later on forever, don't do it.
You'll lose it.
That's right.
Oh, wow. This is from Colleen. What do you think will be the greatest expense for American consumers in 2013? And what do you consider to be the best investment for Americans as well?
You know, Colleen, I wish I could say that all Americans were in the same situation. You all were out of credit card debt. You all had 8 months of an emergency fund. You all were funding your retirement accounts to the max. You all had the proper insurance in place. You all had the proper paperwork in place. You all owned a home. You were all on schedule to own your home outright by the time that you retire, and so on and so forth. But that's not reality, because that's not the situation across the board at all. So the best investment for you is an investment that makes you feel powerful in who you are. Because the more powerful you feel, the more energy you have. The more energy you have, the more you have to go out and make money. So there's no greatest investment, worst investment. It's what is your particular situation. I can tell you, if you have credit card debt at an 18% interest rate, I can guarantee you an 18% return on your money by simply paying off your credit card debt.
Right.
So I can't answer that question because we're not all the same.
Right.
I'm not sure if that's good or bad.
No, that's fine. And what do you consider to be the best investment?
Well, the best investment for somebody right now, let's just say they had everything and they had money they wanted to invest.
Right.
I still would be putting money in dividend-paying stocks or exchange-traded funds. Stocks that you know have a secure dividend. So if they get into trouble, the dividend isn't going to go away. And the dividend is an amount of money that you're paid every 3 months. So you buy the stock and they pay you an income to have purchased it, known as a dividend. It can be anywhere from 4, 5, 6, 7% of your money. I still think that's one of the best investments for Americans today.
Is stock.
With dividends, high dividend paying stocks or exchange traded funds.
This is from Ellen. My home is in foreclosure since I lost my job after 25 years due to downsizing. Should I file for Chapter 13? I'm still looking for work. Much advice would be welcome.
Yeah, Ellen, here's the thing. If your home is in foreclosure, there's really no reason to claim bankruptcy because of your home right now, because the government did extend for 1 more year, so that's this year, it will go away 2014, that if you're foreclosed upon or you do a short sale, that if you owed the bank any money, you're not going to owe income tax on that. So you don't have to be afraid of that. But the question is, besides your foreclosure, do you have credit card debt? Do you have debt that you can't pay? Are you in that type of a situation where you just want to start over? So I would need just a little bit more information. When you say file Chapter 13, there's 2 different types of bankruptcy. Chapter 7, where all your debts are cleared except your student loan debt. Chapter 13, you have 5 years to pay back the money that you owe. I think if you're going to claim bankruptcy, you should claim Chapter 7, not Chapter 13. But I don't know enough about you to say exactly what you should do. But if it's just because of foreclosure, let the house go. You don't need to claim bankruptcy because of that.
This is from Janet. What's the most important thing I can do now that I'm in a divorce after a 28-year marriage? I was mostly a stay-at-home wife and mother. Oh, dear.
Yeah, is not to be angry.
Yeah.
Not to be angry at yourself that you probably knew after 1 year or 2 years of marriage that this was a relationship that wasn't going to work out. But yet, what did you do? You probably stayed in it for the sake of the children, for the sake of the relationship. And now your kids have grown 28 years. They're probably old enough to be on their own. And now the relationship goes, and there you are. If you have, and if you had what it took to raise children, to stay in a relationship that, in my opinion, you probably knew for years you shouldn't have been in, you have what it takes to do anything you want as long as you don't come from a place of anger. Come from a place of strength and power where you know you can just go out and do it. Start all over again. You weren't just, a stay-at-home wife and mother. You were CEO of that household. You paid the bills of that household. You kept that household together. If you can do that, you can do anything, Janet. Don't put yourself down.
Oh, Susie, I feel better already from Janet and me and
But
everybody
don't
else.
you agree?
Yeah,
I mean,
do.
you know,
I do.
You
But
know,
but
why do
it's-
women stay in relationships?
Well, be for a million reasons. Because they think it's going to get better. I mean, I've listened to women tell me this for so many years. Well, it was good the first 2 years, and then it did this, and I thought I could make it better, and I didn't believe in divorce, and I wanted, I didn't want to be a failure, didn't want to be a loser, and then I had little babies and all of that. And then the unfortunate thing is that if women don't work all their lives, it's very, very hard 28 years later to get in the job market. I mean, that's really the question
But
here.
it's not hard to create your own job.
No.
Right? Whether it's being a baker or making meals for somebody or
Right.
becoming a nanny for
Right.
somebody else, there's always something out there.
Yes, and you should read our feature called It Ain't Over Till It's Over, because we have so many women who've been in this position and invented something. I mean, invented the wildest things. Just from what they needed at home, they invented for other women, and they made a lot of money. So you could do that too. I'd read that. That's going to help you. This is from Mary. I'm 57, started online college. For years I have lived check to check, supporting my son. Now that he's grown, I want to know the best way to get and stay out of debt. I don't buy a lot of material items. I will have a lot of student debt when school is over, so I need to know the best way to get in a position that it won't bury me when the time comes to repay. I'm too old to struggle, and I'd like to retire before 70.
So here's the thing, my dear Mary. If you're going to graduate with a lot of student loan debt, the best advice I could give you is to know your options when it comes to student loan debt in terms of how you are going to repay it. Do you pay it on the standard method, the extended method, the IBR method? Do you have loan forgiveness after 20 years? These are all things that you should know what I'm talking about. There is a man in the United States. His name is Mark Kantowitz. He is fineaid.org. This man is the most brilliant man of anybody I've ever met when it comes to student loans and how best to deal with them.
And what's the name of his website?
Fineaid.org. Right. Fabulous people. You should look it up, use the calculators, decide that. But Mary, you have to deal with your student loan before you deal with anything else. The number one loan, more than any other loan that needs to be repaid, is student loan debt.
Is that because the interest is so high?
No, it's because in most cases, 99.9%, they're not dischargeable in bankruptcy. So I still have people who are 68, 70 years of age writing into the Suze Orman show, and they have 12 years left on their student loans.
Oh my God.
And they don't know what to do. Well, their Social Security check will be garnished. So student loan debt has to be handled. And all of you have to know the good part of income-based repayment, which, Marlo, is this new thing that's out now that says you can't pay more than 10% of your income once you're over 150% of the poverty. It's complicated. But so you pay a little bit, and after 20 years, the student loan's forgiven. But what they don't tell you is you will owe income tax on what you really owed on that student loan and you paid. And if you're only paying a little amount, it's actually growing and growing. So the government gets you 20 years from now with an income tax bill.
Why isn't that something Obama's working on?
I do not know.
I mean, I just think the student loan situation is horrible for people.
It's more than horrible. It's horrific. And so therefore, it's important that the people out there, that Mary and all of you understand, how do these loans work, and they cannot be, by any means, ignored. All right.
This is from Tanya. If I have not used a credit card in many years, how do I rebuild and build my credit? No one will give me a card now that I want one.
So Tanya, all you have to do for currently is go and get a secured card at a bank or a credit union, and that will start to build currently your credit rating. I have been working on another way that credit ratings will happen from debit cards, but we're still a few months away from that.
So this is a secure card.
Yep, secured credit card.
This is from CT. I've heard so many things about mortgages that have hurt people. How do I know what a safe mortgage is, and where do I get it?
Yeah, you know, in the olden days when we had negative amortization loans and all these things, nowadays lenders don't really want to lend to you anymore. So chances of you getting a mortgage that's going to hurt you is nil. Just do this. Get a 15-year or a 30-year fixed rate mortgage, put at least 20% down, and you'll be fine.
But all those things that happened with people. With
Yeah,
their-
but now because they all happened and the banks lost all that money and the economy almost crashed, banks aren't going to be able to do that anymore.
I see.
So
Okay.
whatever.
So you won't have an unsafe one.
Yeah.
This is from Jody. Are there suggestions on software for creating a family budget?
You know, again, I mentioned this earlier, Jody. I don't like budgets. I think you just need to know how much money do you have coming in, how much money do you have going out, and where can you cut a little bit so at least you're in sync there.
We're running out of time, and I'm trying to get as many in here. This is from Patty. I'm a freelancer. How do I obtain a mortgage?
Well, if you're a freelancer, Patty, then you're also self-employed, so to speak. So you will have income tax returns that the mortgage company will want to see to verify how much money you make, whatever. And if you have a good credit score, remember about 760 or above, and income to support the fact that you don't have as much debt and can afford a mortgage, you'll get one.
This is from Tim. I'm 52 years old, no retirement fund. Is it too late to start?
No, not at 52 years of age, Tim, but so start now. If you own a home, make it your number one priority to have the mortgage of that home paid off by the time you retire. And if you're just now starting, you better have plans to be working a long, long time.
This is from Detroit Mary. The stock market has been so scary and so many things have failed. We're still in a recession. I have $100,000 saved. I'm afraid to invest it in stocks. Should I invest it in bonds? Should I leave it in the bank? So she has it in a savings account. I can't afford to lose my $100,000. Should I leave it in my savings account? Should I buy gold?
No, so when you're this confused and you're this, so the three main internal obstacles to wealth: fear, shame, and anger. So if you're afraid to do something, you will make mistakes with your money, because then when you shouldn't be doing something, don't do it. So you just said you were afraid. Just for now, leave it in the account that it's in. Should you buy gold? I would not own more than 5% of gold in my portfolio, and I don't think, if you're afraid, gold is one of the more speculative investments out there. I don't think so. Do you have debt? Do you own a home? Do you have a mortgage that you owe? Can you pay down a car loan payment?
Well, no,
student
she saved
loans?
this, though.
Yes, but people save and they still have debt.
I see.
Just because they save doesn't mean that she doesn't have credit
Well,
card
let's
debt.
say she saved $100,000.
And she has absolutely no debt.
Right.
Until she's not afraid, she should only take a small amount of money. Why can't you take like $2,000 or $3,000 and find a good exchange-traded fund that pays you a high dividend yield and see what it feels like for it to go up and go down and give it a try?
Right.
Date your money. That's what you should do. Date your money. Go little by little. Don't put it all in. First $5,000 or $3,000. See what it feels like. Get your feet wet, like when you're going into the ocean and it's cold.
Right.
You don't jump in.
But there's really no safe place.
Well, not unless it's a money market fund or a thing. I would not be buying bonds if I were you right now.
A money market fund, or what's the other thing?
A CD, certificate of deposit, savings account. But if you do buy bonds, people out there buy individual bonds, you are not to buy long-term bond funds right now. Because if interest rates go up, and they're going to go up, bond funds will go down.
Okay. All right. But I'm proud of you for saving $100,000.
Yes, we never said
good.
we weren't
Yeah,
proud,
that's very
but I don't
good.
want you to be afraid. So, you'll never go broke having money in a savings account, sweetheart.
This is from Luella. I'd like to know whether it's cheaper in the long run to lease or buy a car.
Absolutely buy a car. I think leasing is absolutely ridiculous, period. Done.
Why?
Because when you lease once, you lease forever. So you're paying $400 a month for the privilege of driving around in a fancy car that people you don't even know at a stop sign pull up to you and they go, oh, that's a cool car. Like, really, people? And then in 3 years, your lease is up. So now you get another one. So it's $400 a month, $400 a month, $400 a month. Why not just buy a car, finance it, own it outright, and keep it for 10 years?
Right. This is from Stacy. I'm thinking of purchasing a house in the tri-state area. Is this a good time to buy?
Yes, actually it is, Stacy. I think this is a great year to buy real estate as long as you can afford it. As long as you have at least 20% to put down, you can afford the property tax, the insurance, maintenance, your job is secure, and you can pay a 15 or 30-year fixed rate mortgage. If all of that is true, go girl, go.
Oh, that's great. This is from Elaine. What if I die before all my bills are paid? Does the debt go to my next of kin or my husband?
Depends how you took that debt out. If the debt, Elaine, is just in your individual name and you die, the debt dies with you. If it was in joint name with her husband, your husband then will be responsible for it, but it will not go to your children no matter what,
Oh,
unless your children's name is on the debt.
This is good. Patricia wants to know, how do you get your spouse on board with saving?
Patricia, that's a great question, because if your spouse isn't on board with saving, that means he's a spender. If you're a saver and he is a spender, what you are heading for is arguments over money, which is the number one reason for a divorce. So your husband obviously is still acting like a child when it comes to money if he doesn't want to save for your future. You need to sit down and have a discussion with him, not at him. He can't feel like you are his mother or he will rebel against you. So have a glass of wine, get in bed pretending you're going to have a great sexy night and talk about money. That's what I would do.
This is from Donna. I have a goal for 2013. I want to learn more about money and how it works, starting from the basics. Do you have any suggestions on where to start?
I wish I knew how old Donna or Donna is. I have to tell you, I love my books, and I'm not just saying it's because you should go out and buy them. All my books are at libraries. I love the 9 Steps to Financial Freedom. I love the Young, Fabulous, and Broke book I wrote. The Money Class, my latest book that I wrote a year or 2 years ago now. Fabulous to learn about money. If you're a woman, my book, Women and Money. Fabulous. So go to the library, spend a day there, go through it. One of them will speak to you and it will teach you what you need to know.
That's great. That's so great. I know I'm supposed to stop, but this is from Brooke. Do I need a retirement account if I have a trust fund with guaranteed income? Isn't she lucky?
You know, Brooke, if you have a trust fund with guaranteed income and you know that income is going to be enough to pay for you forever, then chances are you don't. However, once, a long time ago, I was dating, as you all know, I'm gay, and so I was dating this woman who was seriously wealthy, from a wealthy family. She was a trust fund baby. And she had more than enough income way back then to take care of herself, and that's what her income was going to be for a long time. If that's what her income still is today, like 20 years later, she doesn't have enough money to live.
Right.
So she should hope that she had a retirement account.
Right.
And also, why wouldn't you want to have a retirement account? Why wouldn't you want to save money on your own that you could do anything with? Because this is the last thing I'm going to say about this. Can that trust fund of yours be passed to a spouse? Can it be passed to somebody that you fall in love with? Chances are it cannot. Don't you want to have something on your own that you can do anything with? I don't know if that's your situation or not, but it might be. Independence is a good thing, sweetheart.
This is from Erica. I have a 401k through work, but it doesn't seem like it's adding very quickly. I'm 48. What would I need to put away weekly?
Well, I don't know what you need to put away weekly, but here's the thing, Erica. If you have a 401k that matches your contribution, you put in $1, they give you 50 cents. You need to invest up to the point of the match. After that, you're far better off with a Roth IRA than a 401k where you can max it out to $5,500 if you're under 50, $6,500 if you're 50 or older. You should also check out to see, does your place of employment have a Roth 401k plan? And that's what you really should be investing in. Just be patient. It will build over time.
Oh, there's so many questions, Susie, and we're out of time. I don't even know where to begin. Let me see here. It's from Leanne. If you are less than 15 years away from retirement, is it best to step up payments to pay off your mortgage early or put that extra money towards your retirement savings?
Leanne, absolutely pay off your mortgage early if and only if you know you're going to keep that house for the rest of your life. And I'll just give you a very quick example. Let's just say it's a 6% interest rate, because who knows, interest rates will go up again one day. $200,000 mortgage, 6% interest. That's $1,200 a month in payments. $1,200 a month in payments over a year is $14,400 a month in payments, right, everybody? How much money do you need in a retirement account to generate after taxes $14,400 a month? Well, at today's interest rates, you need about $600,000. Because $600,000 at 3% is like $18,000 a year after taxes. There's your $14,400, but it was only a $200,000 mortgage.
Right.
Isn't it easier to pay off a $200,000 mortgage than save $600,000 to pay that mortgage?
Okay, I'm going to have to hang up here. Let's see. This is from Xavier. What are the key steps that must be taken in planning for the future with a special needs
So this
child?
is a great one to end on. You have got to set up a special needs trust. If you have money and you have a special needs child, and let's just say they're on SSI, they're getting $600, $700 a month, they're getting medical expenses paid, and you die and leave them money, they are now disqualified from SSI. So you've hurt them. If you have it so that this money can go in trust, a special needs trust, where the trustee can access this money anytime for any of the needs or wants of this child, you will be doing them a favor. So get yourself a special needs trust. Now, Marlo, before we end, we said to people that they could go to SuzeOrman.com, click on where it says Tools and Kits, look to where it says Must Have Documents. If they put in the passcode Sandy, we're going to do this, let's do this in memory of Hurricane Sandy, right? Sandy Hook. Let's do that. Let's help you, all right? So just put in the passcode Sandy, S-A-N-D-Y, S-A-N-D-I, capital, small, I don't care how you do it, but Sandy, you will be able to download $2,500 worth of state-of-the-art documents, good in all states, good on all PCs, my documents that I have for myself. Now you know.
For free.
For free.
Absolutely.
Yeah.
She's the queen. I told you, you're the queen.
One day I'll be the king. Should that be my goal?
No.
Oh, fine.
Be
No
the
problem.
queen.
All right.
Goodbye, everybody. See you next time.